Hello and welcome, esteemed viewers, to 7 Days Upgrade. We delve deep into the currents of wealth and prosperity. What if I told you gold doesn't rise and fall randomly? There's a hidden algorithm controlling its price, and today, you'll crack the code. Many people dismiss politics and global economics, believing it's all too complicated and irrelevant to their personal lives. But let me ask you this directly, is making money relevant to you? Because every single opportunity to build true wealth is directly linked to your ability to see through the grand, overarching context of global events and then, critically, to act in sync with the prevailing tides of our times. So, please, lend me your ears and listen carefully. What I'm about to reveal is far simpler than it seems, yet profoundly overlooked. Not long ago, uttering the 3 words, de-dollarization, was practically taboo. Everyone understood the harsh fate awaiting nations that dared to challenge the dollar's absolute supremacy. Look at Japan, for instance, trapped in a seemingly endless, lost decade for 30 years and still struggling to regain its former dynamism. Greece. It spiraled into utter bankruptcy. Countless nations have been financially played, manipulated, and left vulnerable, yet they silently endured. These cunning maneuvers are textbook examples of what global capitalists masterfully execute, the process of shearing the sheep. It's the same trick, played repeatedly across history. The mechanics are surprisingly straightforward. Let's rewind to 2020, when the COVID-19 pandemic brought the world to a standstill. The powerful financiers at the U.S. Federal Reserve declared the global economy was in dire straits and required urgent stimulus. Their response? Print money on an unprecedented scale, flooding the system with liquidity. As torrents of cash entered the market, the intrinsic value of each dollar diminished. Simultaneously, interest rates, the cost of borrowing money, plummeted. This made borrowing incredibly cheap and easy. What happened next was a global feeding frenzy. Massive corporations, giant banks, and even national governments rushed to borrow these nearly free dollars to fund investments and fuel business expansion. This tsunami of dollars washing over the market caused asset prices to explode, leading to soaring inflation. Stocks, cryptocurrencies, and even digital curiosities like NFTs, essentially virtual pictures, saw their values skyrocket in a frenzy of speculation. Countries like Vietnam, for a brief period, enjoyed a short-lived benefit as this wave of U.S. liquidity flowed into their economies. But when the sheep's wool had grown sufficiently thick and the asset bubbles were fully inflated, the Fed abruptly reversed its course. In 2022, citing the need to combat inflation, they began aggressively raising interest rates. This was the signal: stop investing, stop expanding businesses, and instead, bring your money back and deposit it in U.S. banks to chase those newly higher interest rates. Suddenly, investors holding stocks, Bitcoin, or other assets across the world faced immense pressure. To capture the rising dollar yields or simply to manage their rapidly devaluing portfolios, they were forced into a desperate selling spree, dumping assets to move funds into dollar bank accounts. The inevitable outcome? Stock markets around the globe crashed, and the value of business assets plummeted. But the strategic advantage for the U.S. didn't end there. As the dollar's value surged, assets in other countries became dramatically cheaper when priced in the appreciating greenback. This is precisely when U.S. capitalists, armed with their now stronger dollars, stepped in to buy up those foreign assets at bargain prices. This is their genius, their leverage, exploiting financial cycles to consolidate global resources and wealth. Have you observed this pattern? Almost invariably, within about 6 months to a year after the Fed starts hiking rates, U.S. capitalists are quietly accumulating assets in other nations. Meanwhile, financial experts in your country often sound the alarm, warning of impending real estate crashes and stock market declines, urging you to sell all your assets and hold cash. The result? History repeats itself. Ordinary people are caught in the cycle, selling low during a downturn and often buying back high during the subsequent recovery, getting sheared every single time. This continuous cycle of exploitation has finally pushed some nations to a breaking point. They've begun asking, If our people's wealth is ultimately going to be acquired by US capitalists, and the fruits of our labor end up flowing back into their pockets, why shouldn't we resist? This is why you are now hearing seismic shifts in the global financial landscape. A growing chorus of nations, including powerhouses like China, Russia, Argentina, India, and Brazil, are publicly declaring they will no longer use the dollar for trade. Concurrently, many central banks, often discreetly, are accumulating vast reserves of gold, a move that is powerfully propelling the price of gold skyward at an astonishing pace. I used to tell you that I bought gold not for investment, but purely as a safe haven, a form of insurance against financial crises and wars, following the wisdom of rich dad poor dad. But in recent times, I've come to see that gold also possesses enormous speculative value right now. For ordinary people, this could genuinely be a life-changing opportunity. And best of all, the underlying rules of this game are remarkably easy to understand. I have dedicated significant time to researching and presenting these insights to guide you on a journey of understanding. If you don't show your support with a simple like for this content, perhaps there won't be anyone left to share these critical perspectives in the future. My channel is focused on sharing mindsets for investment and business aimed at those who aspire to be in control, to become truly wealthy. If you don't want to miss these potentially game-changing insights, be sure to follow, subscribe for free, and hit that notification bell. Let's start with a fundamental question: why is it rare to hear about gold investment yielding massive profits in mainstream discussions? From my perspective, gold is essentially an antithesis to the dollar. In years when the dollar is robust, gold tends to be weak. But if the Fed can print money endlessly, shouldn't the dollar's value utterly collapse? Why does it retain its hegemonic status? The reason is this: the financial elite discovered a way to manipulate the entire global system. They linked the dollar's value to a commodity with tangible, real-world value. Thus, even though the dollar itself is mere paper, by being tethered to this vital asset, it perpetually holds value. This ingenious connection allows them to print money at will without losing control. So, what is this asset of such profound value? Every nation aiming for development desperately needs oil. It is the undisputed lifeblood of modern industry. But the US is not, and historically was not, the dominant oil-producing nation. What did they do? They located Saudi Arabia on the map, a major oil producer. Through a combination of financial leverage and military might, the US pressured Saudi Arabia into becoming a subordinate, compelling it to sell oil exclusively in US dollars. This created the petrodollar system, meaning any country needing oil from Saudi Arabia was forced to exchange their own currency for dollars first. But one subordinate wasn't sufficient. The US systematically orchestrated a series of conflicts across the Middle East, coercing most oil-exporting nations in the region into conducting their oil trade in dollars. Beyond direct conflict, the US also weaponized the concept of human rights. They funded opposition groups and sowed seeds of cultural and political discord. If a nation attempted to break free from US influence, it would immediately face accusations of human rights violations. Mild resistance led to international isolation, severe defiance invited regime change or military intervention. The message was stark and undeniable: comply with our rules, and you can participate and earn. Oppose us, and face ruin. Smaller nations found themselves with no real alternative but to integrate into the US financial architecture to access global trade and generate income. Once they accumulated dollar reserves, US banks would sweet-talk them, promising high returns if they invested these dollars back into US financial markets. With the capital gathered from these subordinate nations, the US financial elite would then lend this money to poorer nations at predatory interest rates, effectively creating financial servitude. Imagine being the leader of a poor country. You yearn to develop your nation but lack capital, oil, and industry. U.S. financiers arrive, offering a deal: we will lend you money, and we will guarantee that other nations sell you oil. You only need to repay the debt on schedule. At this juncture, you face two stark paths: remain impoverished and vulnerable to US pressure, or accept the terms, taking a gamble on your nation's future. In truth, you have no real choice. If you refuse, other nations will develop while yours falls further behind. Involuntarily, your entire country becomes a subordinate entity, working to enrich the U.S. financial elite. If you fail to repay the debt, your nation's most valuable assets are seized. If you develop strongly enough to repay, after extracting enormous profits from you, the U.S. might impose trade sanctions, cripple your economy, and fund domestic opposition groups to destabilize your rule. Many perceive the dollar as money, but it's more accurate to see it as just TN, the currency. The true TE value lies in tangible goods and resources, houses, cars, raw materials, even the cost of a bubble tea. The U.S. financial elite's masterstroke is using TN, paper dollars they can print, to acquire TE, real-world assets and labor. What does this imply? When you're compelled to use dollars for transactions, like buying oil, you must hoard large quantities of dollars for payment. This means you must perpetually reserve dollars to maintain exchange rate stability. But if you hoard $100 billion and leave it untouched, from the U.S. perspective, it's simply worthless paper they can print anytime. Yet, to acquire this worthless paper, you had to provide real, valuable goods, resources, and labor. In essence, you exchanged your nation's genuine assets for a stack of paper printed at will. Do you believe the story ends there? Absolutely not. The Fed and the U.S. financial elite reappear, smooth talking, my friend, would you like to earn some money? You don't really need to keep so many dollars idle. You can use this $100 billion to buy U.S. government bonds. They'll press the point, the United States isn't going anywhere. U.S. Treasury bonds are the safest asset on earth. Give us your $100 billion cash, and we will write you an IOU. This money will stay with us for 10 years, and after 10 years, we will return both the principal and interest. If you agree to buy $100 billion of 10-year U.S. bonds, the U.S. financial elite instantly possesses $100 billion in cash. What do they do with it? They immediately use that money to buy resources and assets in your country. This is how they generate immense profits without deploying a single dollar of their own capital. The core nature of this game is simple: they borrow money from you to buy your assets, using your own capital against you. 10 years later, they repay the principal and interest. How? By borrowing money from other nations to pay off the old debt. This endless cycle of borrowing to repay is how the United States maintains its wealth and dominance. Remember this crucial insight: the poor are those who live in paradise but keep their money in someone else's bank. The rich? They live in paradise, but their debt is in the bank. The U.S., the world's largest economy, perfectly illustrates this. The truly rich are those who drive Lamborghinis financed by money deposited by the poor. The U.S. Federal Reserve has borrowed from the entire world, extracting the hard-won value and labor of other nations using mere slips of paper. This is dollar hegemony, a system that has effectively turned a vast portion of the global population into financial subordinates, working for the elite. How does this feeling resonate? It's like thinking you've safely deposited $1 million into a fixed-term savings account, only to discover the fund manager fraudulently used it all to buy lottery tickets. In 2008, when the global financial crisis erupted, U.S. financial institutions created extremely risky financial products and sold them worldwide. Then, the system imploded, causing $4 trillion to vanish without a trace, everywhere except the U.S. While this would trigger total collapse in any other nation, like the Dutch tulip mania or the decline of the British Empire, the U.S. recovered in just 2 years. Why? Because they possessed the unique, unchecked power to print money 24/7, forcing the rest of the world to absorb the consequences. The newly printed money was injected into domestic U.S. businesses, allowing them to survive the crisis. As the U.S. economy rebounded, these companies used their profits to repay the federal. The U.S. financial elite then took that money and went shopping, buying up assets from nations that had not yet recovered from the crisis they helped create. The most galling part? These nations, however angry, dared not truly protest. To foster growth, they needed oil, and to buy oil, they needed US dollars. As the Fed continued its unlimited printing, the dollars these nations held lost value, becoming increasingly worthless piles of paper. If they voiced opposition, the US would instantly label them human rights violators. So, they could only offer a strained smile and try to endure. But enduring too long left them utterly depleted, on the brink of starvation. At that point, the US would magnanimously offer a small amount of food aid, labeling it humanitarian support. In reality, it was just enough to keep them alive, ensuring they could continue working and generating money for the US. And then, you were expected to be grateful. There is no other way in this world. The strong and the intelligent are the ones who write the rules. This is a capitalist society where assets inevitably concentrate in the hands of the elite. You cannot rely on anyone else to protect you, because even your own government might be caught in the system's crossfire. Only you can safeguard your assets. Now, after being relentlessly sheared, many nations have finally reached their breaking point. Are you aware that over the past 3 years, a confluence of pandemic-related issues and energy crises has pushed the US into a severe public debt crisis? To put it in perspective, the US GDP is its income, while its national debt has ballooned to over 126% of that income. Such wildly imbalanced figures have historically preceded severe economic crises in countries like Greece, Argentina, and many others. Consequently, the nations currently holding US debt are extremely nervous. They are asking themselves, if the US continues this level of borrowing, and one day faces bankruptcy, will the money they owe me retain any value? We've seen the US freeze a massive amount of Russia's foreign assets, and you might not realize that a significant portion of those frozen assets included US government bonds. This action sent a jolt of alarm through many other nations. They are now wondering, what is happening? If I stop cooperating with the US someday, will they freeze my bonds too? If my money can just be taken like that, it's too risky. I must sell my US bonds immediately. This collective anxiety has triggered a massive sell-off of US Treasury bonds by foreign holders. As countries cashed out their bonds, their initial instinct was to deposit the money back into US banks to capitalize on the Fed's rising interest rates. But then, Silicon Valley Bank collapsed, nearly wiping out those deposits. After a frantic scramble to withdraw funds, they tried placing them in Switzerland, only for Credit Suisse to promptly collapse as well. What do you do with an immense sum of money that cannot safely be stored in a vault, as it loses value to inflation/printing, and cannot be invested in risky assets like oil or stocks during such volatility? There was only one viable option left, a desperate rush to buy gold. How fervent is this new gold rush? Let me illustrate. Since 2022, central banks around the world have been quietly acquiring enormous amounts of gold. Gold is being bought in tons. In just over a year, nations collectively purchased a staggering 1,200 tons of gold, setting a 55-year record for central bank buying. Everyone understands that the world's gold supply is finite. If the total supply is, say, 100 units, and central banks have now hoarded 80 units, the remaining 20 units available on the open market will become incredibly scarce. This scarcity is the fundamental force driving the price of gold continuously higher. So, the biggest question on many people's minds is, can ordinary individuals leverage this opportunity to make their first significant money from gold? Many hold the outdated impression that gold investment yields very low returns but comes with high volatility. Over the past 100 years, gold's average annual return was indeed only about 4.6%, significantly less than the US stock market indices. Its price volatility was also relatively high, around 15.2%, compared to stocks. But is that the full story? To truly understand gold prices, we must divide its history into two distinct eras. The first is before 1971, when gold was considered actual money. During this time, all nations held gold as their primary reserve asset. If one country held gold and another held Japanese yen, how would you determine their relative values or calculate exchange rates? The rule was simple: the nation holding more gold had the stronger currency, as the ratio of gold reserves dictated the value of the currency they issued. This was the classical gold standard. At that time, the U.S. held the largest gold reserves and declared the U.S. dollar directly convertible to gold. Other nations were told they no longer needed to hold gold, holding dollars was sufficient. This was the first phase of the gold standard, where gold functioned as the world's foundational money. However, from 1971 onwards, everything changed. As the world adopted the dollar, the U.S. capitalists declared, "Since none of you are actually converting dollars to gold anyway, we are abandoning the gold standard entirely." From that point, the dollar was no longer backed by gold but rested solely on faith in the U.S. government. And at that moment, gold fundamentally lost its function as currency and transformed into an asset, like silver or other precious metals. Hearing this, you might feel less inclined to buy gold. It went from being the world's universally accepted money to just another precious metal. It doesn't generate dividends like stocks or rental income like real estate. So, why buy it? But if you examine the gold price trend seriously, you'll notice something striking. Before 1971, the price of gold was almost completely flat, a straight, unchanging line. But after the gold standard was abandoned in 1971, the price of gold began its powerful ascent. The reason is that when gold was merely currency, its price had to remain stable, large fluctuations were undesirable. But when it became a new asset class, it became subject to speculation and accumulation. And as confidence in the dollar steadily eroded, the price of gold relentlessly climbed. Therefore, if we want to evaluate gold as an investment asset, we must analyze its performance from the point it began functioning as an asset, after 1971. From 1971 to 2000, gold's average annual return was 6.8%. However, after the turn of the 21st century, from 2000 to 2025, gold's average annual return has exceeded 10%, with some years seeing gains of 50% or more. This performance has often surpassed many other investment channels, including major stock market indices. I have always said I keep gold, not primarily for investment profit, but as a safe haven taught by books like Rich Dad Poor Dad. Yet, after holding it for many years, I discovered something truly exciting. I initially had no intention of selling, as I prefer holding tangible assets like gold and real estate. My core strategy is, owning real goods ensures you don't go hungry. However, someone might ask, if the average annual return for gold over the past 23 years is over 10%, why do many people, especially women who buy gold jewelry, still lose money? The answer is simple: they are not buying gold bars or investment coins, they are buying jewelry. A gold necklace or bracelet, no matter how beautiful for a wedding, includes significant fabrication costs, design fees, and hidden markups. Therefore, you lose money the moment you purchase it. Furthermore, when we discuss an average annual return of 10% over 25 years, we're calculating from past data. This doesn't mean the return is a fixed 10% every single year. For example, if you lost 5% last year but gained 25% this year, over 2 years you've earned 20%, averaging 10% per year. Do you understand? Those who lack investment knowledge often mistakenly believe investing is like a savings account or a financial product with a guaranteed annual return. In reality, investments always involve volatility. If you invested $100,000 in gold in 2003 and held it for 10 years, by 2013, that amount would have grown to $450,000, a 4.5-fold increase, averaging around 16% annually. But if you bought gold in 2013 and sold in early 2019, you would have faced a small loss of about 1%. Conversely, if you bought gold in 2019 and sold in 2020, after just 1 year, you would have gained 20%. If you aim to make quick money in the short term, constantly buying and selling, that's short-term trading, or bluntly put, speculation. And in speculation, you can win big, but you can also lose heavily. However, if you buy gold and hold it for 10 to 20 years, looking back, you will likely see your asset value has increased many times over. Despite this, I still don't sell my gold. Why? Because the true, peak value of gold is realized during moments of extreme crisis, severe financial collapses where people are desperate, or when wars erupt. And even if such dire events never occur in my lifetime, I will leave this gold to my children and grandchildren. I have no urgency to sell because its value continues to appreciate. Only if I face a genuine, critical need for funds would I consider selling, and at that point, I am confident I would still realize a significant profit. Moreover, I firmly believe there is no safer form of insurance than holding physical gold. During severe crises, even major insurance companies can collapse. But if you own gold, it possesses the power to elevate you several social levels during such times, potentially transforming you from an ordinary person into something akin to aristocracy. Thus, for me, whenever I have available funds, I continue to buy gold. I prefer accumulating gold over purchasing excessive insurance policies. However, if you are the type of person who wants to make money relatively quickly but finds assets like commodities futures, stocks, or Bitcoin too risky, let me tell you, gold is an asset whose trend is relatively easy to grasp, and it can help you make money quickly. You simply need to understand its core value, its ability to serve as a safe haven and preserve wealth. When the collective human demand for safety surges, the price of gold rises with it. Look at the gold market trend right now. This current strong uptrend began in August 2018 when the price was around $1,100 per ounce. What significant event happened then? That's precisely when the US-China trade tensions started escalating. From that point, gold's price steadily rose, reaching $1,455 per ounce by May 2020. But in just the next 3 months, gold absolutely exploded to its all-time high of $2,070 per ounce. What happened from May to August 2020? You guessed it, the COVID-19 pandemic unleashed global panic. However, after August 2020, positive news gradually emerged. People began to realize the initial panic was somewhat overblown. While terrifying, the pandemic wasn't the absolute extinction-level event some feared. Most people eventually contracted the virus and became familiar with its presence, while vaccine research and development began progressing rapidly. Concurrently, a new presidential administration took office in the US, and the market anticipated a reduction in trade tensions. Consequently, the price of gold began to retreat. In 2022, when the US Federal Reserve announced its aggressive interest rate hikes, large capital flows returned to the US, strengthening the dollar, and gold prices declined again. Then, look at early 2025, Donald Trump assumes office again and begins imposing tariffs globally, escalating tensions. What happens? Gold hits a new historic peak. Do you perceive the underlying pattern governing gold's fluctuations? When the world is awash in good news, and people feel secure about the future, they prefer holding cash, and the price of gold tends to fall. Conversely, when the world is riddled with bad news, when you step outside and see everyone anxious and complaining about the economic situation, the price of gold surges. Now, consider the current global reality. Major corporations are announcing mass layoffs, banks are failing, trade wars are intensifying, and numerous countries are facing US financial manipulation. All these factors are fundamentally pushing the price of gold higher. Not only that, but a growing number of nations are explicitly abandoning dollar-based trade and advocating for de-dollarization, which directly weakens the dollar while simultaneously boosting gold. This confluence of factors is why gold continues to climb, recently reaching record highs above $3,100 per ounce. In the grand scheme of things, the most important investment you can ever make is in yourself. Your brain is your most precious asset because it can conceive of countless ways to generate income. If you are like I was, starting with no capital, no connections, no family foundation, perhaps even burdened by debt, your immediate focus should not be on learning financial investment strategies, but on finding an automated business model that can earn you money even while you sleep. Many people are trapped by jobs that consume all their time, leaving them no opportunity to invest or even learn. Their salaries are capped, and no amount of hard work will change that fundamental limit. Crucially, the world is transforming at breathtaking speed. If your profession or business model cannot exist or leverage the internet, it is sooner or later destined for obsolescence. Look at the journalism industry. It existed for hundreds of years, seemingly impervious to change, but now how many people read physical newspapers? Everyone gets their news on their phones. Previously, street advertising was ubiquitous and highly profitable, but now the platforms generating the most advertising revenue are YouTube and individual content creators. Finally, I recently saw news reports about China finding 2 massive gold mines containing up to 2,000 tons. With all that we have discussed, why is this news being released at this particular time? Please share your insights in the comments below. So, now you know, gold's fluctuations aren't just random waves, but signals driven by deep economic forces. I am committed to sharing free knowledge on how to become wealthy, how to be an entrepreneur, and how to invest to achieve financial freedom. Gold's hidden laws never change, but YouTube's algorithm does. Help us beat it by smashing like, subscribing, and commenting gold laws below so we can keep exposing these truths. Your support is the only reason we can research these explosive topics. I also extend my sincere best wishes to everyone who clicked like on this video. May you all achieve financial freedom soon.